I'm Joanna Simpson here at Risk Minds International in London. Joining me now is Simon Wills, Senior Advisor at ORX.
What keeps successful businesses alive during financial storms? Discover 5 proven strategies they use. Before it's too late to save your own business. Risk awareness. In the world of business, the most successful companies aren't just lucky. They're prepared. At the heart of their success lies a deep understanding of risk awareness. These businesses don't wait for financial storms to arrive, they anticipate them. They study market trends, analyze past crises, and prepare for worst-case scenarios. Whether it's inflation, supply chain disruptions, or sudden changes in consumer demand, they stay alert and ready. Risk awareness begins with asking tough questions. What if our biggest client pulls out? What happens if raw material costs double overnight? Instead of ignoring these possibilities, smart businesses run simulations, create what-if models, and develop response plans for each situation. They also invest in education, not just for top executives, but for entire teams. Everyone from finance to operations is trained to understand potential risks and how to spot them early. This collective awareness helps companies act fast before small problems turn into big disasters. Another key move: they constantly update their knowledge. The financial world changes fast, and what worked last year may not work now. That's why they stay informed with the latest economic news, consult experts, and attend industry events that focus on risk trends and prevention. In short, successful businesses treat risk like a hidden enemy, always lurking, always evolving. And their first line of defense is simple but powerful awareness. Because the earlier you see a threat coming, the better your chances of surviving and thriving through it. Diversification strategy. One of the smartest tools successful businesses use to reduce financial risk is a diversification strategy. Imagine putting all your eggs in one basket. If that basket falls, everything is lost. But if you spread the eggs across multiple baskets, a single drop won't ruin you. That's exactly how diversification works in business. Top companies avoid relying on just one source of income. Instead, they build multiple revenue streams. A tech company might offer software, consulting, and training. A clothing brand might sell online, in stores, and through wholesale partnerships. This way, if one stream slows down, the others keep the business stable. Diversification also applies to markets and customers. Successful businesses expand into different regions or countries so they're not dependent on one economy. They target a variety of customer types, from individuals to corporations, to stay resilient even if one group's demand drops. And let's not forget investment diversification. Profitable companies don't invest all their capital in one place. They spread it across different sectors, real estate, stocks, technology, and more, to reduce exposure to any single market crash. Even within supply chains, smart businesses don't rely on just one supplier. They work with multiple vendors from different locations to avoid delays or shortages during global disruptions. In every case, the goal is clear: minimize risk by spreading it. Because when you're diversified, a single loss can't take you down. It's not just a safety net, it's a smart long-term growth strategy. Cash reserves. When financial crises hit, only those with a strong safety net survive, and that safety net is called cash reserves. Successful businesses know that profit on paper doesn't always mean stability in practice. That's why they keep real cash aside, untouched, ready for emergencies. Cash reserves are not just leftovers in the bank. They are strategic buffers that protect companies during tough times like economic slowdowns, unexpected losses, or sudden drops in revenue. When sales dry up or payments get delayed, these reserves allow a company to keep paying employees, covering rent, and staying afloat without begging for loans or shutting down. The smartest businesses calculate how much cash they need to survive 3 to 6 months of slow or no income. This is called a runway. Having this cushion gives leaders breathing space, the time and clarity to make smart decisions instead of panicking. It's not just about survival. Cash reserves also create opportunity. During a downturn, while weaker competitors struggle or collapse, companies with reserves can buy assets at discounted prices, hire great talent, or even expand into new markets. They turn crisis into advantage. Building these reserves requires discipline. It means setting aside a portion of every month's profit, even during good times, and resisting the urge to overspend. It's not flashy, but it's what keeps businesses alive when others go under. In business, cash isn't just king, it's a shield, and successful businesses never forget that. Smart investments. Successful businesses don't just save money. They grow it wisely through smart investments. While risk is part of every investment, smart companies know how to balance that risk with reward by making informed, strategic choices. First, they invest in themselves. This includes upgrading technology, training staff, or improving products and services. These internal investments might not show immediate returns, but they increase efficiency, customer satisfaction, and long-term profit. For example, automating routine tasks can cut costs and boost output, while upskilling employees leads to stronger performance and innovation. Next, they look outward, but carefully. Instead of chasing trends or gambling on high-risk opportunities, they choose stable, researched investments. This could mean buying shares in reliable sectors, investing in income-generating real estate, or supporting startups aligned with their core mission. Smart companies also diversify their investment portfolio. They avoid putting all their capital into one place. A balanced mix of assets, including stocks, bonds, property, and sometimes even digital assets, helps them reduce exposure to any single market crash. Before any investment, they ask, what's the return potential? What's the worst-case scenario? How does this fit our long-term strategy? They also review performance regularly, adjusting where needed to avoid long-term losses. And most importantly, they don't rush. Smart investing is a marathon, not a sprint. In short, successful businesses treat money like a seed. They don't bury it in risky soil. They plant it wisely, water it with patience, and grow it into something sustainable, even during uncertain times. Continuous monitoring, even the best financial plan, can collapse if no one's watching. That's why continuous monitoring is a key pillar of how successful businesses handle risk. It's not just about making smart decisions, it's about constantly reviewing those decisions to ensure they still make sense. Markets shift, costs change, competitors rise. A strategy that worked 6 months ago might be dangerous today. That's why top businesses track everything, from cash flow and expenses to customer behavior and industry trends. They use dashboards, financial reports, and real-time analytics to stay informed every single day. These businesses don't wait for quarterly reviews to spot red flags. They use weekly or even daily check-ins to catch issues early, before they grow. For example, a sudden dip in revenue might be a sign of customer dissatisfaction or a market shift. Fast detection means faster correction. They also monitor external risks, like changes in regulations, inflation rates, or currency fluctuations, especially if they operate globally. This awareness helps them adjust pricing, change suppliers, or rethink strategies on the fly. Importantly, they encourage transparent communication across departments. When finance talks to marketing and operations talks to sales, hidden risks become visible. Everyone stays on the same page, which makes the whole system more secure. And lastly, successful businesses review their risk management plans regularly, updating policies, testing emergency protocols, and ensuring every employee knows their role during a crisis. Because in the end, risk doesn't disappear, it evolves. And only those who watch closely and adapt quickly stay ahead of it. Think your business is risk-proof? Think again. Subscribe now and tell us which risk scares you most. Don't miss our next video, Why Most People Stay Poor, coming soon!